Hello, everybody. Welcome. My name is Jason, the Wizard of Ops, and unfortunately, Dark Matter couldn't come, but he was replaced by Samantha LaDuc from LaDucTrading. Welcome, Samantha.
Welcome. Thank you so much. I appreciate this invite.
No, it's great. And, since I invited you, so much has happened, with the whole Greenland thing, but also my wife, who usually produces this, is not here. So I'm sitting here fumbling about trying to figure out. Here we go.
You'll do awesome. All right.
So I'll be trying to manage everything today. But so let's get to it because you've got to go at 9. And we have so many geopolitical events now to talk about. Originally, I wanted to talk about the Supreme Court decision on tariffs and its impact, and also the Supreme Court hearing about Lisa Cook, which is happening on Wednesday, that we learned over the weekend that Jerome Powell is going to attend. Let's get that out of the way, and then we'll talk about the new news.
Well, we don't have really a lot to go on. We know that Trump made a big flex in Venezuela by capturing Maduro, and this is a flex, I call it, because there is, of course, this, isolation agenda, America first or alone. It's hard to really distinguish the two. But basically, I don't really think it's about the infrastructure of oil and rare earths like everyone else. So I think there's just way, way, way too much investment that's needed there. At the same time, there's too much investment that's needed here. So in the big scheme of things, I think it was a big flex to kind of let China know, and other countries that are buying Venezuela oil to stay away. And I think the same kind of tremors are Greenland. I definitely know the people of Greenland do not want to become a welfare state under Trump, and they definitely do not want to change their lifestyle. They get free education, free health care. Denmark charges, for the U.S. to already have lots of surveillance for intervention and defense. So they can put troops there anytime they want. This is another flex. Yes, there's rare earth and a humongous amount of investment that potentially would need to come into play. But again, investment there, over there, how about right here? So I think there's a lot that's going on geopolitically that lots of people have opinions on, but we really don't know his end plan, right? It's a strategy of chaos. And I wrote about this a year ago, and it was all under this dome, forgive the term, of devaluing the dollar. So I still maintain that every single flex, every single policy is to force reshoring, right? Companies come here, makes the dollar fall. And relatively speaking, this is very, very good for exporters in the US, not so much for importers. It is, of course, inflationary on prices. There's no question about that. Tariffs are inflationary on prices. Companies are making buku bucks passing along those tariffs in the form of higher margins, and that can continue for a little bit until the consumer chokes. So right now, we've got that huge K-shaped economy that everyone talks about, but it just basically means that inflation is very wealth producing to asset holders, whether it be a car, a house, a stock market. So, there's also a real, Google it, inflating debt away. It's a thing. So folks that are, okay, we're going to default or we're going to inflate the debt away, that's a little bit out there. Right here and now, I just think every single policy decision has been very much deterministic about devaluing an overvalued dollar relatively in order to force companies back home.
That's interesting. So you don't think that Venezuela, because I think Trump is sitting there talking about trying to manage Venezuela's oil. I also find it funny, if Greenland has all this oil and all these resources, why hasn't anybody done anything about it before?
Because they're protected under NATO, and NATO is protected by the US, and now he wants out of that. So
what I mean is, why didn't NATO dig for any of these resources? I mean,
they still buy. Remember, we're the largest exporter. I mean, 20% of oil is export. It's going to hit us, and they're the largest importers of our LNG. So it's going to hit us, meaning US. So there are a lot of strategies here of independence that I think is very much shrouded in this plan of de-dollarization, debasement and devaluation that is going the way that, we expected it to go, that Trump would follow through with massive tariffs, and every dollar drops, he gets more tariffs going, or the tariffs cause the dollar drop. Either way, I don't think this is by design, not by default. So I think basically this focus on, it's just obscuring the Epstein file, drama of where Department of Justice is breaking the law, et cetera. Yes, it's all a distraction, but there are so many distractions. There are so many flexes that this, to me, just seems like a grand plan of making the dollar fall so everything else appears taller, right? That's what happens. Assets will continue higher. That's why when I had that MarketWatch interview and I said 8,200 as a potential melt up target this year. She's like, why? And remember, there's always if then, but they only print the click one. I said, if the dollar continues to fall and it falls faster, then the corresponding, reaction is a higher equity market. So, 8,200. Anyway, that was the market headline. But the point is, it's based on a falling dollar, tariffs, the whole thing. So I think basically this weekend risk, and we have to talk about the market action, not just economics, of course, but and the Supreme Court is an unknown. We know that they have opened up their docket today. So everyone's thinking maybe they talk about the tariffs, the IEPA. But the Trump administration has already done the dog and pony show to make sure that the news gets out that it would be devastating if they don't agree with Trump, or at least hold on to the revenues they've already collected, et cetera, et cetera. I mean, they're going around going trillions of dollars of investment by foreign firms in the U.S. will go away if the tariffs go away. It's drama. But in reality, the Supreme Court is very politicized. And the legislative branch is very politicized, and it's very hard to get out of this grip of Trump's, agenda. So very likely the tariff bite is not the market moving news. Very likely the Lisa Cook pronouncement will be, because that will give precedence for Trump to fire Powell earlier. And he would love to discredit this man. He's doing everything he possibly can in his power, including, trumped up criminal charges. It's all a way to apply pressure and bully to make sure that Powell does not stay on past May 15th. So May 15th, he's, the end of his Fed chair term, but he can stay on for years as a Fed governor. And that's exactly what he should do, just to be a thorn in Trump's side. And that's also what would give the Fed pause, as they won't, in this aggressive rate cutting regime, because they won't have consensus. They don't have it now, honestly. So they need consensus. They need rate cuts. Japan needs Fed rate cuts. He wants to get Powell out. He wants to diminish the power of the Fed to set monetary policies so that the White House can. This is going in a very, very opposite direction to our Constitution and our rule of law and our three branches of checks and balances. What's the result? What's the very likely result of all of this? A falling dollar.
That's true. That's true. Because if Trump does get his desire to lower interest rates, even despite the fact that inflation is higher than their target, I mean, that devalues the dollar. So you're right. I mean, everything that Trump has been doing has devalued the dollar, and that's shown in metals prices. Is that right?
Oh my God, not even a little bit. So, all the reasons for metals to move higher are in full view, but it's then taken on from a macro standpoint, right? But then it took on a fundamental view, which was, oh my God, right now these miners are going to do hot fire flames because the underlying price of metals has increased. And then it took on a completely new, tenor when the trade wars kicked into high speed. And all of a sudden, the nation finally realized that we are dependent on China for everything. I don't mean just our comforts, our company profit margins, our military strategic defense, our semiconductor AI tech dominance that we keep telling ourselves about. So the point is, all of this was dependent on a supply chain of these, metals and minerals and materials, oh my, for which China has a physical dominance, full stop. And this is ironic that instead of playing nice in the sandbox with China to, encourage reshoring and investment in mining, et cetera, they have to turn ultra aggressive in their trade policy, which then frightens companies home, also drops the dollar, incentivizes them, right? That helps them. But this is really, I think, going to be a game of chicken. So maybe Trump, in the end, gets what he wants, right? This industrial renaissance in the U.S. But then everyone realizes, wait a minute, all these very important metals, mining, and materials, not only are they, mostly in China as it relates to refining, which is a very big difference, right? Not just getting out of the ground, but actually refining them.
Yep.
And in manufacturing, Asia manufacturing stronghold, right? But we now need it for AI data centers. And so there's like a fight between the government as US government as venture capitalist investing aggressively in all of these companies that are critical, now deemed critical mineral, critical this, critical that, against the industrial buyer, who right now is about price insensitive, right? They just need their silver, their copper, their lithium. Oh my. So they are price insensitive, also trying to buy up mines, right? Amazon went to Rio in Brazil and buying them stakes in a mine. So, I mean, this is the trend. Now they're getting very desperate about sourcing materials. They didn't have to do that before. I mean, that was the beauty of why Apple had a stranglehold on the US market at the prices they did. They could charge ridiculous prices. Everything was sourced in China, from the rare earth minerals to the processing to the manufacturing, everything, right? So this is no longer, and they're trying to industrially retrofit how they're going to make money and not charge an arm and a leg so that consumers aren't freaked out. So I think right now this constant in your face, oh my God, we have a supply deficit of all the things that we need. We have a trade war with China that Trump fulfilled, and that was his promise, and we should have believed him. And then, of course, we have this overarching falling value of the dollar and faith in U.S. Treasuries. So that's a confidence game. It's the perfect storm for metals and material. Full stop.
Yeah. So then that begs the question, though. Recently, Bitcoin and crypto has been the gold replacement, right? That's what people been saying. Was it leading, or is it now lagging?
Bitcoin, the crypto, all that is separate from stable coins, but is just an inflation off ramp. That was Jeffrey's term. We work with Jeffrey at LaDucTrading, and he has long been of the strong belief that it's just a decoy, inflation decoy. So speculative money went and raced into this fixed asset, blah, blah, blah. And then all of a sudden, and I wrote this over a year ago saying, I wonder when the Bitcoiner holders or whatever they're called are going to realize what's going on over in the metals market. So, and this is what's happened. Oh, that is a real shiny thing. It's not a digital shiny thing. It's a real shiny thing. So that FOMO has also joined in. But I think that honestly, Bitcoin trades like a currency, not a commodity. So I know people think of it as a digital gold. I don't. They think of it as a store of value. I don't. I think of it as a currency. And it is going to be, strategic of getting people comfortable with this digital world as they draw or build a parallel lane for digital dollars. So we got the real physical stuff, right? And then we have the digital dollars that they're actually building. And that includes the stable coins, trumped up demand for US treasuries. It's fake. You get a falling. Anyway, this is a longer story. So stay stable coins and Tether and the treasury companies that are putting crypto, right, the ETH, whether it be Ethereum or Bitcoin, on their balance sheet in order to, manifest themselves as this new world order. Seriously, it's a waste of speculative dollars. It's a complete waste of speculative dollars instead of going into things, the manufacturing of this capex, whether it be data centers, whether it be mines, whether it be industrial plants. So now folks are starting to say, oh, that's not such a great return. We have to focus on things over paper or digital. That's it. That's where we're at right now. We're in this really turn period.
Yeah. So I guess the next question is, what is, now there's geopolitical tension. I don't think Trump is going to militarily try to take over Greenland. There's nothing really to do, and you just walk there, I guess. But it would destroy alliances, and so I don't think he'll militarily do it. What do you think all of this means for stuff like oil and other commodities? I guess you could say like wartime safe havens.
Well, I think that oil is its own entity that's being replaced by many countries, right? I mean, China's mandate to go EV, they're already 50% there. And India is already 30% or 20% gaining to 30. Europe's already 30%. But again, that's their relationship with Russia and their dependency on the US and all that kind of stuff. But we're only 10%. So we have a lot further to go. And this nuclear renaissance, right? The solar, all alternatives, they're not replacing coal, which is still number one in the world. And they're not replacing oil. But I have felt, as you know, been very bearish in oil the past few years. So I still see falling global oil demand unless or until we can get this industrial renaissance, right? And such. But I don't think that the tensions, whether it be Venezuela, Greenland, Iran actually matters as far as taking supply off. But it's not so pivotal for oil. Oil doesn't seem like it's ready to move yet, but move higher, I should say. If anything, I still see it wobbly in that $40 to $60 zone that I gave the past 2 years. And so that's definitely happened. But my point, and not 40, but we hit 54, but we could absolutely fall further. Wow. My point is the higher oil call would need to be either, right, rising demand, which we don't have right now. We have falling global oil demand, or it would have to be a geopolitical flare up. And if you look on a map of gold, I'm talking big picture, every time there's a flare up, it peaks and it pops and it goes lower. So I don't care if it's Russia invasion of Ukraine or when the drone hit the ship or, whatever or the Iran Israel escalation in June, right? It serves as a nice short the rip. So even Venezuela, nothing happened. So oil to me is just in a protracted downturn, honestly. But all the other metals and mining, they will hit volatility. There's no question about it. There can be, truce. Maybe we get a truce with China. That would absolutely calm things down. A balanced budget, that would calm things down. But what are Vegas odds for either of those? So in the meantime, despite all of the volatility in the metals trade that we will see, that we saw a little bit in August, metals really are the new oil.
Nice.
So I said that last year, and I'm sticking with it for this year. There will be volatility. I don't think it's the top, but I definitely think that we have a rotation from the paper that many people trade into the miners. We still have this rotation in play, and I think this can play out for a while.
Yeah, I think it's just like as an FYI to all the viewers out there, if you want to invest in gold, do not invest in GLD. That is paper gold. It is not real gold. If you want to invest in real gold, buy CEF. That is the Sprotts Gold and Silver Reserve up in Canada, and it's physical. You could actually withdraw. If you buy enough, you could withdraw, and they'll send you gold. Like that's real gold. So if you want to buy physical gold, that's my recommendation. CEF. Go ahead and look it up.
You can also trade, however, lots and lots of issues and the underlying, is impacting the miners, which are real.
Yeah.
And in fact, I'm going to be on a webinar Wednesday with a podcast, whatever, Wednesday afternoon with Jason Burback. And he was a metals and mining newsletter writer for 15 years with all the big names. And so I want to pick his brain because he's so fundamentally knowledgeable about the miners. Because I made a call, I don't know when it was, sometime in the fall. I said, it might not be a bad idea now to start rotating dollars into Canadian and go directly to the mines, right? So in other words, it's harder for retail in the US. It's not impossible by any stretch, but the point is there is going to be a lot more benefit of trading miners in Canada than in addition to, yes, the CEF, the physical. But I'm just saying in general, miners still have a long way to go in this cycle.
Yeah, miners, the only issue I have with miners is their debt loads. Like you have to incur a lot of debt, and that requires liquidity from banks. And with the Treasury,
it's actually the royalty companies come in and help give them that liquidity and that debt financing. So the royalty companies are golden right now.
Yeah, that would probably be the great place to be.
Yeah.
All right, it's 9 o'clock. I promised I would let you go at 9 o'clock.
What are we doing with this market real quick? We're going to do option stuff. Tell us, because I had written, of course, had said before the weekend risk, another tape bomb. There's no quiet on the weekends with this guy. So now here we are with some lower levels. I've got 6,700 is buyable. Obviously, I'm wrong if that breaks, and I'm watching very carefully. Not just on, the levels that you give, but also CTA selling. I've got some threshold of pain that I can see breaking. But prior to this, there did not look to be a lot of degradation underneath the surface in either breadth or selling. There had been very little sustainable rate volatility or FX volatility, currency volatility. You need those two things for me. I always see those two things percolating up before we have equity volatility. So right now we have this, expected gap down on a Tuesday and some churn post options expiration on Friday. Where do you see us going this week?
Yeah. So, I was going to get all of our macro stuff. And then if you had to go, then,
no, tell me.
I would love to have you on. You can talk about it. So Volland is I'm brought up this week, and I made it very large because this was the area right here that we were at when Tuesday struck, right? Or it was 69.40. We were right here, and I said that we can fall down to this area before we find some support. And there's actually a little bit of resistance above. But this area right here is honestly the target. And now we are deep in the support area in an illiquid time, which is holiday and pre-market. Or for this week, I think that we can bounce back up to 6,900 in this area. At the very worst, or at the most, I guess like 6,920 might be a good like dead cat bounce area. And then because this is making vol waves across the whole curve, looking at it through February option expiration, it also has the same kind of target. This mostly disappears after this week, and all this aggregate Vanna comes down to kind of roughly even. But I think we will have a bounce to this 69.05 to 69.20 kind of area. And then we'll have to see what happens there, because overall options and skew have been overpriced based on spot vol dynamics. Like the normal skew that we've been seeing in the markets has increased implied volatility about 0.6 points for every 1% move in SPX. It is now double that priced in. So when it's double, that means they're overpricing those options, or overpricing skew, probably because Vanna is lower than normal, or their aggregate Vega is lower than normal. So it's overpriced already. They got a little bit higher priced, but I think that there's a really good shot of bouncing. I don't think we will reach 6,700 anytime in the next week or two. I think this is a drop to buy. Of course, do it in a fixed risk manner. Be very careful with volatility, because you're right, it's going to be volatile. One thing that I showed,
It's hard to price in if they rule on Lisa Cook in Trump's favor, it will be volatile.
it'll be extremely volatile if something like that happens, which,
yes,
we're in negative gamma goalposts on them. This is all expirations. The goalposts kind of say that 67.75 will start to slow the market down if we get down that far. But we should bounce heavily between these two goalposts of 67.75 here and 6,900 here. I do think we can pass, we could peak above 6,900. This is going to be my kind of end of week target. I think we will bounce another like 60 points, get to here, and then we'll have to see what happens after this week. How are people positioning themselves? Because right now people are, a little bit skittish. The market makers have overpriced options, and now they're overpriced a little more. We'll see if we get a vol event. I think Monday showed a very strong VIX increase, right? Implied volatility increase, but it's still a liquid. So we kind of have to see how things hash out today. I still think that we will bounce back up to 6,900. The way the market's been going, maybe even today.
Excellent. Okay. I see a note by Morgan Stanley, their quant team. It said 1 week SPX implied vol has dropped below 10% back to summer 2024 lows, and options market pricing just a 10% chance that the S&P will move more than 5% over the next month, which is 14th percentile versus the past 5 years.
Wow.
So.
Yeah. Morgan Stanley, I'm not going to talk about their options people, but anyway.
Okay.
I've seen some things that they put out, and I'm like, what?
Well, the underlying message is volatility is still suppressed.
I know. So their measure of implied volatility is the question that I have. But,
okay.
But that's really because implied volatility is not static. I mean, today's implied volatility is different than the one in February or the one in March or the one in April. There's a strong contango still existing even right now, despite the geopolitical stress. It is suppressed, but it is not, the skew is very highly priced. So,
okay.
But at the money is low priced, in the wings is highly priced. And that creates a tension that could be volatile, but within a range. And that's what we've been seeing. So, so that's kind of what I see for a swing basis. And then I will go to today. Because as you know, now we have 0 DTE options, and things happen. For today, this is our new Delta Decay widget. So this combines the concepts of Vanna and Charm into a more accurate view of how much notional dealers have to hedge. Right now, we can see a drop even as low as 6,800 down to 6,795, this area. In the whole volatility regime, but we could also bounce up to, again, 6,900 today. As these deltas kind of flip to negative, that is a bullish thing. So again, negative gamma usually creates volatility, and this outlook for today only creates volatility as well between 6,900 and 6,800. Okay. So buckle up, be patient, and be risk averse. Right? You got to.
But don't follow a lot of AI slop that says Europe is going to trigger the nuclear option. And I'm not talking about detonating a bomb, of course, in their anger against US, about selling US treasuries. If they did that, this is a macro note. But again, you're just seeing a lot of drama out there about how bad this is. And maybe one of the reasons why the market also can absorb this hit, even if it's a hit job, is that the U.S., and this Kathleen Tyson, who is an expert on this, and I will retweet her message this weekend on the retaliation by Europe in response to Trump's retaliation of them not giving him Greenland. Anyway, the story is U.S. could take the hit much better. In other words, selling U.S. treasuries, right? Europe is talking about it. It's in the paper. It's in the FinTwit. Ignore it. U.S. could take the hit much better than Europe could withstand retaliatory selling of gilts, bonds, and tressors. The potential for blowback in European rates and volatility is massive, systematically disruptive. And she knows she helped build the system. So if you want to see her long form, I'll retweet it under @Samantha LaDuc on my X post.
Yeah, please do.
I wouldn't worry about that. However, just worrying about that does have pressure on putting a bid in yields. So we do have to keep an eye on that for sure.
Yeah, I think though too, and I'm kind of surprised. The news cycles, I guess, have an interest in making us scared. But between tariffs, the first time Trump tried to pressure Powell, the first time Trump tried to take Greenland, all these things that Trump threatens, he has backed off every single time.
There is a taco element to it, but
yeah.
But still, the market still has to go, oh, right? So that's why I'm like, anyway, we'll see what happens on Wednesday. That's really the macro moving event of the week. And otherwise, earnings, lots of it. So looking forward to kind of like just navigating that. Usually the market sticks together during an earnings season. It doesn't do anything too dramatic up or down. So that's why I'm looking more towards March, May for more risk in markets. Yeah. But we'll talk about that another time.
Yeah, let's talk about that next time. Thank you so much for coming on, Samantha. Everybody, you can stay tuned because I am going to go through Dark Matter's trade plan.
Super. Okay.
But yeah, thank you so much for coming on, Samantha. Take care.
Cheers. Bye.
Bye. All right. Thank you, everybody, for sticking with us. I think, Samantha had some really great insights there that helped us out, kind of try to at least conceptualize on a macro basis what we're seeing. However, now it is time for me to go to Jay's trade plan, because that is the overwhelming reason why everybody shows up to this show. So, and his trade plans are very good. He's very solid Volland trader. So let's take it next. His overall summary is talking about the gap below 6,900 SPX, pushing price into compression and increasing volatility. And again, I kind of talked about it on the intraday, on the weekly, and now on the monthly. We could see a little bit of support. I think we are going to probably bounce back up to 6,900. He has futures trading between 6,870 and 6,900. I do think we will bounce. That's right now, this drop is kind of an illiquid drop, and implied volatility was overpriced before. Now it's much more overpriced. And I think as that comes down, as the markets calm down, as they kind of realize, this probably is not going to come out the way, this is not going to manifest the way that is going to be awful for everybody. I think that we will at least boost up to 6,900, probably a little bit past. So as far as catalysts go, we do have the Bank of Japan. And another thing that we didn't talk about with Samantha is Japanese yields have skyrocketed on like their 30 years. I'm kind of that probably is playing more of a concern in the equity markets than even all this Greenland Trump stuff. It's probably these yields. Japanese can be repatriating their money and actually getting something for it. Other than the Japanese, the BOJ meeting, obviously we have the WEF, the World Economic Forum in Davos, which is going to have some meetings regarding Greenland. So we'll see how that goes. And on Wednesday, we will have a big Supreme Court day, because that is when Supreme Court is going to rule or have a hearing on Lisa Cook. And you could kind of get a sense of the court of how they will be. It's kind of a toss-up, because prior to Ms. Cook, the Supreme Court ruled favorably for the Trump administration on firing government officials that don't align with his agenda. I think Lisa Cook might be a different story, though. It's not exactly a government entity. So yeah, we're gonna have two Supreme Court, Lisa Cook, and which Jerome Powell will see in person, and we're gonna maybe get the Supreme Court decision on tariffs and all the fallout from that. I also think, and if tariffs come out favorably for the markets, if they pare back the tariffs, the Supreme Court does, market could shoot past 6,900 pretty quickly. So just these are things to think about while you are trading. Trading on a swing basis has taken a little bit extra sense of danger now. So And we also have manufacturing PMI on Friday. So, and a couple of earnings as well. Let's check out the earnings. We have Netflix over here. Netflix has kind of fallen out. They're no longer the N in Fang, right? Now it's NVIDIA, right? Netflix has kind of fallen off the face of the earth a bit. I did do a look on Volland earlier for Netflix, not public, but it was it kind of I looked at Netflix pretty favorably. They're probably hitting closer to a bottom. Maybe you could say they are golden. You're right. Okay, so all right. We also have Intel. I mean, these are like a lot of kind of Dow stocks. We'll see how it goes. Nothing that I'm really like zeroing in on. Kinder Morgan is an energy play. Johnson and Johnson. Usually those are kind of defensive plays. So there's nothing here that really I focus on too much. Netflix is probably the most interesting. Jay's swing. He's looking at downside dominant structure, which is true. I mean, overall in February, it's a little bit downside, but I think it'll be a volatile range right now between 68 and 6,900. Could be for the rest of the week. Price came down below 6,900. And yes, Vanna exposure flips negative, but Delta or Gamma is extremely negative as well. So, yeah, no Gamma support emerges above 6,900 to stabilize price. There's a little, that's kind of more of a resistance kind of thing. The support kind of starts at 6,800. So that's where I would start looking for bottoms. Strong negative Vanna centered around 69 to 6920 SPX. That's kind of where I see a little bit of a kind of like a toppy area. Maybe like you could say a dead cat bounce or whatever. Downside Vanna shelves are 68.85, 68.75, and 68.50. We are past all that right now, right? So I think we're at like 69.35, 68.35 or something. I think again, 68, or we could get down as far as 67.75, 6800. Then I think that'd be a good place to start looking for a bounce. Gamma is insufficient above 6,900 SPX to pin price. Below 68.75, Gamma thins, definitely. It's negative Gamma on the all expiration. So yeah, all these things can create extensions. But again, I think 6,800 is kind of a bottom type area. So yeah, so again, we're going down these shelves, but we're already kind of past a lot of these. I do think though that we will bounce when the market's more liquid. I think we will bounce a little bit higher. This little chart, which I always liked whenever he shows this, we've passed all these levels. he posted this last night, and we kind of blew through it a little bit. I think partially because of Japan. Again, I think the Japanese yields had something to do with this. So yeah, he needs to see 6,900 as the primary control reclaim pivot. He wants to get back up to there. I agree. I think that's a big level right here. And again, we're at 68.30 something. I do think like as soon as the market opens, we'll probably have an initial pop. But yeah, I think like 6,900 is the big pivot point. That's the spot that I think we could pop to. If we get down to 6,800, that's when I'll actually start putting on bullish positions. I'm still wide butterfly range bound. And the implied volatility it hurts a little bit, but I'm still well within my range. So I'm very okay. I'm okay with the way the market's trading right now. So yeah, to follow his posts, yeah, we've seen that before. And it looks like at 9:46 he posted an update. Wouldn't say our levels have changed, but our bias shifts, and we find support near 68.50. Yep, he still has to update his new levels now that we've passed that. We're at 68.35 or something like that. All right, well, it is 22 open. So everybody keep your head on. Here, let me see if I can get some comments. We're like, no problem, Julian. No problem. I'm very happy to give. Am I going to give Netflix earnings for my paid Substack? Sure. I can do Netflix and Intel. Those are, I'll write that down. This is on my to-do list, right? And check it out. You can see my add damn funds to-do list. I'm going to put your request down, Patel. All right. NFLX, which means I have to do it today, right? Netflix is after the close. INTC. It might be kind of tough to do earnings when, in the middle of a sell-off, but overall, last time I looked at Netflix, my earnings outlook was pretty positive. Like, I kind of think we will pop a little bit from Netflix, but yeah, they're kind of no longer a part of the tech companies. Now they're kind of settling into, I guess, more of a media company, but yeah, all right. Netflix and Intel, gotcha. Thank you, everybody, and may Volland help you in your future trading ventures.